Hello and welcome everyone to the Annuity Straight Talk podcast, episode number 170. 30 episodes from the bicentennial mark. My name is Brian Anderson, founder and creator of AnnuityStraightTalk.com. Still here in Mexico. Sun's going down on the Yucatan Peninsula and having a good time and enjoying the sunshine and some warm weather while it's snowing back in Montana. Please like, subscribe, or comment on any of your favorite podcast platforms or on YouTube. Top right corner of any page on AnnuityStraightTalk.com. Going to share the newsletter, episode 170. Let me show you where that schedule a call button is. You guys want to see it? It's really easy to find. Get a hold of me. And just a quick note, if you call me, if you do manage to find my phone number, which I don't advertise as much anymore, it's out there somewhere, just leave a message. I get, all these people are calling me 5 times in a row. I might be in a meeting, for crying out loud. I don't want to hear the beep. But on episode 170 today, a topic that's, again, it comes up all the time, just like everything else. And most of everything I do is something that I've heard on multiple occasions. A lot of people that get to retirement have done well by saving money. Sometimes you skimp on certain things. So when you get there, you might think about buying the cheapest annuity. And I'm here to tell you it's not all it's cracked up to be because this is a big purchase, but we're going to talk about what that means. So everybody worked hard to get here, and some of those have been more blessed than others, but the level of success depends heavily on inputs. How much you work, how much you made, what your education was, how much you saved, what your spending habits were, all of those things. You had a lot of that was in your control. One of the wealthiest clients I have was a garbage truck driver who just saved the hell out of everything he got, never made a ton of money, ended up really well set up for retirement. And I've known several doctors, lawyers, business executives, sure as hell lived a classy lifestyle, but don't have the money to sustain it in retirement. I don't care if you have $5 or $10 million. If your spending level is too high as a percentage of your assets, you don't have enough to retire. My dad's a great example. He's got some nice savings, but nothing that any of you guys would be jealous of. And he's got some good pensions and all that stuff. Those are all siphoned from his paycheck, so he lived within that, and he's got a really comfortable retirement. So habits are what make or break it. Regardless of where you are on that spectrum, you had the opportunity to succeed, and those who can retire all want the best. So one thing I'll say is, like, the more successful we become, the more nice things we enjoy. If you don't make a ton of money, but you save really well, you're going to start to maybe enjoy some of those nice things in retirement. One of them is retirement. And I'm not talking about material possessions. Those things are nice. Some of them are a waste of money. Some are nice. But time is the most valuable commodity. Whether you made a lot of money or a little and just saved well, what you're really buying right now is time. So when you retire, you should do it without worry, because you don't want to go into the first 5 years enjoying yourself, only in the next 5 years to have to stress, scrimp, save, or cut things out of your life. You want to be able to always spend your time on things that make life better. Do you really want to spend it concerned about the safety of your money? It's a good question to everybody. Now, I do always say find the best deal you can get, but it's not always the highest rate or the highest payout and all that stuff. You got to be efficient with your money so you've got room for all of the extras. There's a fine line between good quality and excellent quality. All annuities are good. Some of them are excellent. And it's not just about the annuity itself. The longer you are attached to an insurance company, the higher quality you should require. This is most applicable to income products where you're stuck in there for life, but it's also important for short-term products and parking spots if you're just trying to protect some money and put it somewhere for a period of years. This is a really great follow-up to the Sentinel Security podcast, the company that's being looked at closely by regulators. And I wonder again, why aren't some of those other guys who broadcast, why aren't they talking about it? You know why? Because they sold a bunch of it, I think. I'm not saying who, but that's just my guess. And every time, if you haven't ever bought an annuity, you got to think about this. So when I ran with that podcast, there are a lot of people that reached out from Sentinel Security and got in touch with me, asked me, hey, what should I do? And every one of them had somebody was saying, oh, you got to go do this, you got to do that, get out. I told them all to just, hey, stay put, let it shake out, see what happens, because I'm not going to say go take a 10% surrender charge and get something that may or may not be better. They have what they have. They should ride it out. and stick with the agent. If the agent who sold it to you is trying to get you to bail, and he doesn't have his priorities in line, and he's not really paying attention to the news and does not understand the industry either. I'm not trying to make a quick buck off anybody, and that's not why I did it. One case in particular was a guy named Jack. He had a guaranteed income deal that was still in deferral for a few more years. So he bought it a couple years ago, and he was going to wait 5 years, I think, and his plan was to take lifetime income. It's a substantial amount of money. The figure does not matter, because whether you have 100,000 or 100 million, it's a lot of money. It's a big deal, but it is justifiably a big concern for these people. So I pointed every single one of them to whether they want to get out of it or not. They first have to go look at the podcast I released last year on the rules and the etiquette and kind of the standards, the industry standards regarding an early surrender of an annuity contract. But basically, you need to be able to determine that a new contract has an objective benefit over the old contract. Otherwise, the new insurance company won't accept the replacement. They'll red flag it and say, nope, denied. And it's happened before to me as well, because we disclose everything and we want to see if the insurance company will take it. Doesn't matter how bad you want it. And the case where I had it denied, the client fully understood what they were doing, really wanted a new contract. It wasn't Sentinel Security, completely different matter. So in this case with Jack and Sentinel Security, it was a really close difference. The new contract would require a slightly longer deferral to match the income of the existing contract. It was close, but in order to get about the same amount of income, he'd have to wait another year. That's material, in my opinion. I explained all of these things to him. He has a choice to make. I haven't heard from him in a few weeks because I told him what the deal was. And I think rightfully, they're probably going to stick with what they have for at least the time being. At certain times I was looking at it, I thought they would swap the contracts and get something new with a more solid company, but they had to make a big sacrifice, and I'm not going to push something like that. I just lay the information out. They can make the decision they want. And even if they did decide to switch, I do not know that the new company, Nationwide as a company, I do not know if they would have accepted it. So Jack was reasonably upset and didn't really want to worry about his hard-earned money getting cut. I told him take the guaranteed income in a few years is one thing, to worry about that. But he's going to have to think about that company for the rest of his life. I'm not trying to rub salt in the wounds, but it's not just a matter of getting to the income. And if they weather the storm and get to that point where they can use the money, would that maybe be in the back of your mind for the rest of your life? Hey, are they still going to do this? Every month when you open the mailbox or check the bank account, see if the check's there or the deposit came through. I'm telling you right now, it is not a decision anybody wants to be faced with. Now, if you look back, he would have done just as well if he bought it from a different company a couple of years ago. Now, we can't change that. I don't want to focus on it too much, but anybody that's just starting out, why would you want to risk it? You might get a little less income, or if you have a specific income goal, a better contract, better company might cost you a little bit more. But we are talking about one of the largest financial decisions you're ever going to make. Get something that's really good. Everyone who buys an annuity from me has several options, and I suggest that at the very least. I know Sentinel Security was very competitive for income contracts several years ago. Everybody that I bought one from me saw that, and I said, wow, it's a B-plus company. They're very small. They're heavily influenced by private equity. I'm not sure I like that so much. And I know a handful of people said, we're okay with it. We're going to go with it. And I said, okay, get it from someone else. Damn, am I glad I don't have to deal with those phone calls right now. But the point of that is we often skip the highest payout and take a little less to go with an incredibly stable company. And this is the way I've said it to a lot of people. No matter how much money you made, you all worked hard for it. And when you spend the money that you worked hard to get, you like to get nice things, or at least things that are valuable or worth what you spend. I sure do, because I worked really hard for what I have. I didn't make a penny for 3 years when I started this website. The first commission check I got was $280. That didn't come anywhere near compensating me for the time I put in. When I go buy something to support my hobbies, my habits, to help my family, it's nice. My mules are the best. Not because of the money I spent, but the time I put into them. Both time and money there. I go fly fishing. I get the best rods you can possibly find. I call them the best, Sage fly rods. I will argue that point with anybody out there. Yeah, you can get something cheaper that's pretty good, but I want the best. Hunting Ralphie, you want it to shoot straight, or do you want it to be You want sub MOA or 3 MOA? What do you want? Cowboy boots, you want steel toes, you want hard leather, you want something that's going to last 3 seasons to get the living hell beat out of them? You buy something good. I buy nice stuff. I think you do as well, and those are the kind of people I want to who recognize value, are willing to spend a little bit extra to get it. Yeah, we want the best deal. Sometimes the best deal is quality. We have all done well, and we buy nice things. Why don't you also buy a nice annuity? Absolutely goes for guaranteed income, because you want the company to be around. I had one guy I talked to today said, I want my insurance company to be boring. I want them to have done the same things for 150, 200 years that they do now. I want boring and a guarantee. That's what we're looking for. We're not looking for exciting and flashy. If you want to talk about index annuities for growth, they're all about the same. Go with a boring company that has the same thing as a company. Here's the bonus. Here's the index. Here's all this stuff that's never been proven. We got these hot shots from Singapore running the index. Really? Do you want that, or do you want boring? Because I'm telling you, it's going to work out the same. One of them you're going to think about forever. One of them you're just going to enjoy, because you're talking about, go back to last year's sleep at night annuities. You want to sleep at night? Buy good stuff. We make money. We work hard for what we have. When we buy something important, we make sure it's nice. Buy a nice annuity. This has been episode 107. If you want to talk to me about this, don't make a comment on the website asking about a specific company. If I haven't mentioned it, then I have nothing specific to say about it. If I have, but if you really want to ask me about specific, I think somebody, that lady last, what about Pacific Life? I'm not going to, I didn't mention anything good or bad about them. So you do the research as well. But if you're going to engage me, we're going to do business together. I will do all the legwork for you, explain every piece and part of that. Top right corner, schedule a call. Any page on annuitystraighttalk.com. Share it with your friends. Like, subscribe, or comment on any of your favorite podcast platforms or on YouTube. My name is Brian Anderson. I got one more episode in Mexico, then I'm going back to Montana. And damn, I hope the snow melts, but I got a feeling I'm going to have to deal with a little bit when I get there. So anyway, thanks for joining me. You guys have a great week, and I'll talk to you soon. Okay, bye.